Welcome. Thank you for joining the conversation about the 19 rules for getting rich and staying rich despite Wall Street. As we move through this session and others, I'm going to ask you to go to certain passages in your book, so please have it handy. If you don't have a book, you can buy one from your local bookstore, from our website, uniquereads.com, from Amazon, or wherever ebooks are sold. It comes in hardback, paperback, and ebook format. All right, let's get started now. I want you to have the right perspective in investing. And this starts by your thinking about your investments and your house, your principal residence, as a business. Now, what does every business need? It needs two things. It needs steady cash flow, and it needs assets. Some assets to give you some of that steady cash flow, and also assets that will increase in value over time. All right? A good business gives equal weight to both the steady cash flow and the assets that you have. This is called a total return strategy, and it gives you the ultimate flexibility in your portfolio as time goes on without having to guess what the future is going to be. All right? So that's the perspective I want you to have. A total return perspective, all of your investments, including your house, as a single business. All right? Now, go to page 29, rule number 1. Know your goals is the first thing that you have to do. If you want your portfolio to help educate your children, you want it to give you an increasingly nicer lifestyle, you want to be able to travel, you want to have a good retirement, you want all four of those. It does not matter. You need to know what your goals are, and you need to write them down on a piece of paper. Put that paper wherever you have your investments so that when you get ready to make an investment, you can look over your goals to make certain that what you're about to do will help move you forward towards those goals. All right? The second thing you need to do is to have discipline. Discipline in how you handle your strategy, and discipline in how you put up money and grow your wealth. All right? Along with that discipline, you need to have patience. There's not a single investment strategy that works every day of every year for a lifetime. Some work better at one point in the economic cycle than others work in a different economic cycle. What you want to do is to have the patience and the discipline to know that the total return strategy and the 19 rules will work over the long time. All right? Now go to page 32, rule number 2. We alluded to this in the last session. No one knows the future. They can't tell you what the weather's going to be. They can't tell you what the economy is going to be doing. They can't tell you what a company is going to be doing any more than perhaps the next month. So when someone tells you that a company is going to earn $7.82 3 years from now, the only thing you know for sure is that they don't have a clue of what they're talking about. All right? Their model might tell them that, but the inputs to their model are unknowable in the present. Now, why is that? Because decisions that affect the future are made in the future. Okay? Now, the 19 rules we've told you does not guess the future. What the 19 rules does is it helps you find a good operating company that has management with the confidence and competency to pay you, the owner, a share of the profits each year in the form of a dividend. Okay? Now go to page 35, rule number 3. Success is not having to sell assets in retirement. Here again, it's part of what Wall Street does. They use what are called Monte Carlo simulations. And they ask you to give them 4 pieces of information. What is your portfolio size going to be when you retire? What are your living expenses going to be in retirement? What is inflation going to be in retirement? And what are the assets going to be earning in retirement? How do you know that? No one knows that. Is the stock market going to be up or down 5 years from now or 2 years from now? You don't know. No one does know. Perhaps if you're going to retire next week, you'll know what your portfolio value is going to be, but that's all you would know. So these are unknowable variables that are put into the Monte Carlo situation. If you are too conservative, you might not have enough money for retirement. If you're too aggressive, you might have lost too much money for retirement. And there's one other unknowable factor that we think is absolutely critical. Retirement is a long period of time. Somewhere in there, your family might have a situation which requires you to take a lump sum out of your portfolio to deal with that emergency. Do you know whether the stock market's going to be depressed at that time or whether it's going to be elevated at that time? No, you don't. So you have a situation to where your portfolio could implode because of your estimated withdrawals, as well as an unusual emergency that takes money out of the portfolio. The total return strategy and the 19 rules allows you every day of every year to know exactly where you are and how your income from your investments is growing, so that when you don't have a salary anymore, you will know what your income is from that portfolio. Okay? Now go to page 38, rule number 4. Wall Street wants you to have private investments, venture capital, alternative investments, international investments, mutual funds, ETFs, unit trusts, all kinds of different investments that they put together in a package. All you need to get rich and stay rich are 4 things. You need to have emergency reserves of 6 months of your operating income. You need to have a home with a 30-year fixed rate mortgage on it. You need to have individual financial fixed income securities that have maturities from 2 to 30 years. And you need to have common stocks, individual common stocks that are listed on exchanges in this country and are U.S. domiciled companies. That's all you need to have. Nothing unusual, nothing spectacular. That's your strategy, and it will work. So now you have the correct perspective for getting rich and staying rich. And then in the next session, what we're going to do is to go into depth of some of the critical issues that will help you build your wealth and keep your wealth. Thanks for being here. We look forward to seeing you in the next session.